What's up, legends? How you doing? I am finally back home after my trip away, settled back in, got all my equipment, feeling good in my usual trading space, and got a lot I want to talk about today. Even though it looks like the market has actually done nothing, we do have some good news going on here that I will get in today. I think we're getting closer to some sort of a direction, so that's what I want to get into in this video. Not sure if today will be the day that presents us a trading opportunity, but if not today, then hopefully sometime soon. So if you are new here, welcome to the channel. If you are returning, welcome back. Massive shout out to all of the TTC tribe in the Discord. Thank you guys for being so patient with me over the weekend as I was away speaking and unable to be as active as I normally am. You guys held down the fort. Lots of conversations going on there, lots of trading going on there. It was amazing to see. So big shout out to all of you. Now I want to talk about Bitcoin on a smaller time frame, on the 1 hour time frame. I'm using the Binance chart, even though I personally trade on OKX. If you are looking for an exchange to trade on, don't forget to grab the links in the description of this video because there are discounts on fees in there for you. If you're Australian like me, Binance does not allow you to leverage trade, but OKX does. So be sure to grab that link. All right, let's get into this. So what I want to talk about on the 1 hour is just a bit of a follow-up from what I had mentioned on yesterday's update, in that the price action was so choppy around the 50 EMA on the 1 hour time frame that it was really difficult to pick a direction, and we really needed the price to either get above the EMAs or below both of them. And currently we are still right in the middle of both of them. However, the good news is that they are tightening and coming closer together. So a decision probably will be made soon. The caution here, the thing that I don't like about the current price action is we have not yet managed to get above the 200 EMA, the yellow one here. And if we look back through this entire drop, we have been under the 200 EMA on the 1 hour time frame since the 6th of May. So if we are to have any sort of bullish momentum, the first thing that needs to be done is price needs to break that EMA, retest it and be able to hold above it. Then we may have a chance of coming back to around the weekly high at around 34.2 and potentially the 800 EMA as well, if we have some good momentum behind us. The bearish case, however, which is still very much a concern, is that we break the 50 and we actually head back down to the weekly lows, back down to the 26. Now, when we zoom out on this and go to a 4 hour time frame, the problem that we have is that this whole area here is only a wick. So one or two things can happen if we start to head back down, and that is either the market maker comes back into this zone to pick up what was left behind, the liquidity that was left behind here, and then potentially starts to change trend after that. So that's one possibility. Actually, there's three possibilities. So that's number one. Number two is that we are still in the midst of a W formation right now, and this here could come down to be the second leg before we push out. So that whole W formation would look like this. So right now there's a chance that people who open short positions down here are in the midst of being trapped. That is one chance. And when we check the volume in that area, you can see that there are really quite large spikes around that area. So that is one possibility, that we are trapping shorts by moving sideways here and really testing patience. And then the last possibility is that the market maker is actually favoring lower prices and we come down and break that weekly low and head further and further down. Now, if number three happens, the question we have to ask ourselves is, where are they going to want to drive price to? So let's deal with that one first, because there is a lot of fear in the market. Let's just have a look at the fear and greed index. This is now down to an 8. And again, coming back to the last bear market, we're sitting around 11, Corona around 9. So we are in that panic and fear stage. Even some days when we were at the 30s in June, July, we were around here, but we're actually closer to the Corona low and the last bear market low. So let's just put things into perspective here before we move on to what might happen short term. If price is going to head lower and find a real support level, then the question is, where is it going to stop? Because if we zoom out on the daily time frame, if we actually do break this recent low here, there's not much structure to stop us until we get back down into about this range here, right? Which is between 24 and about 21. We also know that there's a CME gap here between 23.7 and 26. It's only just had 1 wick into it so far. So there is a chance that we come down to fill that whole gap at around 23,800. So if we mark that gap out on our futures chart here, that's the lowest level of the CME gap there, which does line up with this structure here. So it does feel like a good target level. I did this post on my Twitter yesterday. If the events that unfolded in the last week in crypto have made you want to quit, just remember this: wealth is accumulated in a bear market and realized in a bull market. You're giving up at the worst possible time. And what I mean by that is that the most money is made when everybody else is fearful. What I've been telling the tribe in Discord is this is a difficult time to try and pick a reversal. However, it's an amazing time to dollar cost average for the long term. We have broken the 800 EMA on the daily. This is not a great sign. We have retested it and also failed. Also not a great sign. But there are some things I want to point out on smaller timeframes in the meantime that is rather interesting. So whilst this price action is not that great, we did have Jerome Powell speak last night, which did cause the volatility in this one candle, and looks like we've already recovered from whatever was said. So that is one good sign. One thing I have noticed over the past few days, if we switch on the session times, one thing I have noticed, which is an anomaly for price action, is that the Asian session has actually been running a trend for the last few days. Now, Asian session usually just sets the high and the low of the day, but even if we go back to before the weekend, we ran a trend here, we ran a trend here. It's pretty much been ever since around the 10th of May that the Asian session itself has been running a trend. So this got me really quite skeptical, and I wanted to figure out, why does that happen? Because after Asian runs a trend, UK is usually reversing it or going into the consolidation itself. So you can see here we went into consolidation. Here UK reversed it. That's the yellow there. Here we had a pullback end of session, then UK ran with the same one. Here we reversed it. This current week that we're going through right now, UK reversed it. Asia ran a trend and UK basically went sideways. So that led me on a path of trying to investigate, why is Asia running the trend when that's usually the UK's job? And what I managed to find out was actually two things. Number one was this article saying that China returns a second top Bitcoin mining hub despite the crypto ban. Now, when I went to Crypto Quant to have a look at this actually disproved that suspicion, because this is showing that miners are actually selling, and this is bearish. So that wasn't the solution to why a trend is running. What I did find next, however, was this, which kind of makes a little bit more sense. Japan's largest investment bank, Ready's new crypto subsidiary. So they're basically saying that they're acquiring a lot more people to work in the digital asset space. There's a lot of things they've got going on, like Web3, blockchain, NFTs, blah, blah, blah. But the part that was interesting to me was this bit right here that says, just last week on Thursday, Bloomberg reported that the bank began offering BTC derivatives to Asian clients. Trades are executed on CME Group's platform, which we know the CME Group is the market maker. That's where the market maker trades, right? Which handled 6,944 Bitcoin futures contracts on May 16. So now if we have a look at May 16, that was only here. I do have a feeling that Asia is running a trend to get results early. And the other thing too is potentially running it early because of this bit down here. Nomura must also now combat the prospect of losing most of its quarterly profits due to a $345 million write-down on a transaction that they reported on Tuesday, which happened during the 2008 economic turndown. So, like everything else, are they using crypto to make that money back? Maybe that's why we're seeing price action during Asian sessions. So how do we deal with it? The way that I personally have been dealing with this is I've actually been using the dead gap zone to set the high and the low of the day. So the dead gap zone is between 5 p.m. to 8 p.m. New York. And if we mark it out here, it's just this gray area that is on the indicator. Again, if you need this indicator, just search for it in indicators in TradingView. Search market maker session times by Trade Travel Chill, and you can add it to your chart regardless of where you are. I've been noticing that that the dead gap is setting the high and the low of the day, and then Asia extends it either to the upside or to the downside. So you can actually run your trend a lot earlier in the day. Finally, for once, us Aussies are getting some price action. And a similar thing could be happening right now as I'm filming this, where it's potentially setting the high and the low of the day right now. What you do need to be cautious of, however, is where we are within the EMAs. So if we go back to the 1 hour time frame, don't particularly want to be opening trades between the two EMAs. It may take a little bit more patience, and maybe today's not the day, but maybe sometime tomorrow or even Friday, or maybe it's going to be early next week that we break one of these EMAs. And if Asia is still running a trend, then you can use the dead gap zone to set your high and low of the day and then trade the trend in the Asia session. When you then go and have a look at trading light futures, we can now use this to see where the high and the low of the day is trying to be set. So you can see all this red above current price. Those numbers there at 700, 800, 900 are really quite large. That one at 31,000 has been there for a couple of days now. It really does look like the market maker wants to keep price under 31,000. Below price, there's currently a lot of buyers trying to push us up to there. I'd be skeptical of those buys being the potential bottom, but we did have big orders at 30,000. This is the level that I'm more interested in at around 28,850 should these orders here disappear. So when we transfer those numbers over onto a chart, you can see here, this is if we come down the 28 area, but this is the 30,000 buy zone, the highest level, and this is the 31,000 short zone. So that 31 lines up with the EMA. On the 15 minute, it's the 800, but on the 1 hour, it's the 200. They're the same thing. So really, it still looks like the market maker wants to keep price below that 200 EMA on the hourly. So if anything, I would be skeptical of trying to open longs. Still, at the moment, I would be waiting to see if we can come up. What we do have here is one attempt into this zone, one attempt into this zone, and another attempt into this zone. So we have 3 attempts into the zone. If they don't break this level, a reversal is imminent. Now, the thing I need to point out here is that even though that 31,000 is the level, you got to have a look at how many orders are below that 31,000 that it would have to eat through first to get up to 31,000. So all of these sell orders here up to, say, the 560, that's an entire sell zone. So we don't want to bank on Bitcoin going up to 31,000 before it rejects. It could only make it to 30,800. Now, when you see it like that and you pull it out, you can see that price is rejecting right under that sell zone. So I'd be very cautious today. If we do make one more attempt into that zone, it could be a good area to short should you get the right candle at the time, because what we need to see are wicks like this to the tops of the candles once it tries to attempt there. The other thing too is if we don't make it back up into that zone, then you're looking for an M formation reversal, which could be happening very soon. Ideally, you want to have an M formation reversal throughout a session changeover. So it could be that the second part of this M actually forms when Asia opens. That would be decent. If we can get a reversal of that, it would be fairly bearish. But you have to understand there's going to be a fight at 30K to try and hold price up. And if it creates a higher low there, then that's the best you're probably going to get for the day. Now, as far as long positions, we have to get above this sell zone for there to be any chance of a long position. So price would have to come up, get through all of these shorts that we now know are waiting here, retest that zone, then there could be a long position from there. But we also have to be mindful that it's any day from now could be midweek reversal day, and we have been trending up for the beginning of this week. So there is a chance that midweek reversal is actually going to bring us back down. And if we can't crack this zone, then we're not looking for longs until we have that reversal and find a new support. Let's just have a look at Hype Block and see if there's any new leverage coming in that might help us out. These leverage levels look super thin. We're only at 2 billion with the delta to the longs. We could come up to this level here at around 30,700, which will take out these shorts that are up here that are currently still safe. But other than that, there isn't a lot of leverage. So it could take some time for that confidence to build. And it could mean that we don't get that exciting price action for quite some time. It also explains why we're in a pretty big range right now for the entire week, really. If the market maker does want to induce retail to take a position, it's probably going to be that they're going to break this level up here here and push price to the upside. If the market maker is just accumulating themselves, then they may go with this one, the M formation, and bring price back down. Why? Because retail will sell and they will buy from them. So how do we know which one? We need to watch the speed of the candles and the wicks in the candles. They're what's going to tell the story for now. And in order for you to protect your capital, the best thing that you can really do right now is not make a move until one of those two conditions are met. All right, guys, hope that was helpful. As always, don't forget to smash that like button, hit the subscribe. Going into a bear market, very difficult for people on YouTube to continue to grow their channel. So every like, every subscribe, every comment really helps more than you could possibly know. And I really appreciate it. Don't forget to also follow me on Twitter, because if there are any emergency changes or anything that pops out between my YouTube videos, I always post my updates there. Get my social media links from the description of this video. Don't just search me, because there are so many spam accounts out there. If anyone tells you that I invest for you or I will turn your money into more money, it's a scam. Don't fall for it. Have an amazing day, and I will see you for tomorrow's update.